Are you a business owner with any experience around investing? And you've heard rumors traveling around that Blackrock is taking over the world. They're buying up all of the residential real estate. They own 80% plus of the stock market. Myself and my little pug, Otis, are going to debunk this myth so you have a better understanding around how index funds work, or how capital managers actually work, and how you can make informed and educated decisions around your investing. So, it's actually no secret that BlackRock and Vanguard, State Street, if you look at any of the top holdings of any stock on the stock market, the vast majority of those are the top three positions. Well, why is this the case? Do these fund managers actually own the assets? Do they own the world? The reality is they don't. We're going to realize that these particular fund managers are essentially exactly that. They just manage funds as what is called a custodian on behalf of their investors. Now, over the course of the last kind of 30 years, but particularly the last decade, we've seen a massive surge in the uptake of index funds. So what is an index fund? An index fund is basically an investment vehicle that gives you the ability to have exposure to all of the companies or investments that exist in a particular index. For example, the S&P 500 is the top 500 companies in the US. If you bought an S&P 500 index fund, you would own all of those 500 companies proportionate to their size. So for example, if you put $1,000 in, you'd have a biggest chunk of the top company and you'd have a small little slither of the 500th company. And that automatically shifts and changes as those companies go up and down on the stock market. The benefit is that we don't have any overlay of fees for active management, where other fund managers will actively research and try and pick stocks that they believe are going to outperform the index. The interesting fact is that 80% of them don't outperform the index after fees and taxes. The second thing is that it is very transparent, it's very diversified, and it's actually very tax efficient because many active managers are actively trading their portfolios, meaning that they are crystallizing tax. So the higher your tax bracket, often the worse the tax outcome is when you have an active manager at play. Now, essentially what is happening is that companies like BlackRock essentially have a pool of funds that they receive on behalf of investors. And those are retail investors like us. Now, those are superannuation and retirement funds. There are other wealth funds that provide them with money in order to invest via those pools. Each of those pools have a mandate. So some of them could be diversified across the whole world. Some of them are going to have a specific asset class, for example, US stocks, or it could be biotech. It could be emerging markets, whatever it might be. And essentially the reason why their name pops up is because they are the custodian. It is their pool that is acquiring those shares in that particular company. And because of the sheer amount of money that exists in these funds, it's just a tremendous amount of money, we're talking trillions of dollars, that they seem like they own everything. They don't own everything. They are custodians for almost everything. So what impact does this really have, and what say do they have? Well, from a pure investment or market manipulation standpoint, they don't have a lot of sway. The reason for this is because the index funds, by definition, must mirror the benchmark that they're investing in. So it's not like, for example, let's say a particular stock is third on the stock market. They can't have it the largest weight in their portfolio because that would be an active strategy. They need to have what's called a tracking error, which is essentially a small amount of deviation from the actual index's returns. And you can actually go and check the tracking error to see how good they are at doing this. The other part is this typically isn't done manually. Now, this is all done using software and algorithms that ensure that the market is weighted correctly, so the index produces a real index rate of return. However, they do have some sway at a board level, right? Because they have so much money invested in these companies, then they definitely do have influence in terms of strategic decision making and corporate governance. Probably not as much as an active manager like, say, a Warren Buffett, because obviously Warren Buffett can essentially hold these companies ransom to say, hey, if you don't do X, Y, Z, I'm going to just withdraw all of my funds and sell them off, and then your stock price is going to tank. So as opposed to a BlackRock, where they have some sway because of just their sheer size and influence. However, they can't do that in an index fund, and therefore there's not necessarily a lot of market manipulation from that respect. Now, what do I think about index funds? I love index funds. My personal investment strategy largely revolves around index funds above and beyond my property and business investments. My number one investment is business. because I can actively be involved in it, I can manufacture value, and ultimately it provides me with the highest rate of return, which is relative to the risk I take in business. I understand that it's very risky. Second is property. I love property. And when we think about shares and property return about the same over the long term, the difference in that is that property we can leverage and we can magnify our cash on cash return. However, it is illiquid and it is expensive. So then the third part is index funds. I'm not against active funds. There's definitely some fantastic active funds out there. And for some of our clients, we do use active funds in their portfolio to produce a particular characteristic or to provide them with certain protections or peace of mind, or particularly if they've got ethical views, we need to ensure that we have active management to ensure that those ethical views are maintained. So there's definitely a place for active funds. However, the idea is to essentially blend them with index funds in order to bring the overall fee down. So take your tinfoil hats off, guys. Read into the facts. BlackRock does not have a vested interest in trying to own all of the property market, all of the share market directly. You need to understand how the mechanics of these investment vehicles work, because I've seen so many people fundamentally change their investment strategies based on a rumor. And ultimately, when it comes to wealth, we need to be objective, we need to be rule-based, and we need to be systematic in our decision-making. So if you have any questions about ETFs, index funds, my old pug Otis here, let me know. Happy to cover them off. I hope this video was insightful. Catch you guys soon.